there's a red thing that says.
Our next project, you just need to take pictures.
So take pictures of these and then pass it around. Okay. And then we'll go over this folder. How much time do you have?
Still on 30. You have an hour.
Yeah.
We have 50 minutes.
Okay, perfect. Okay, what are we doing today?
We're talking about the project.
Exactly. Does everybody have a team?
Yeah. How many people in?
3. Does everybody have a team?
I don't have because my
Your teammate evaporated?
Yeah.
Okay, how many people have one person in a team?
How many people per team?
3. How many people have one person in a team? Okay, how many people have 2 people in a team?
Oh, they need a team.
Okay, 2 people on a team? Okay, you can be in their team.
No.
No, you can be in their team. What? You found a team member? Okay. How many people? How many do you have?
1.
1? Okay, you're with them. You're with Nikki.
Are you on our team? There's someone else.
No, he's now, and then she's going to be over here. Yep. Okay. How many people have one person on a team? How many people is a team? Are a team of 1? Okay, good. How many people are teams of 2? Okay. How many people have teams of 3? Awesome. How many people have teams of 4? Okay, how many people have teams of 2? Teams of 2. Teams of 2. And Amanda, are you in a team? Are you in a team? How many are in your team? 3? Okay, that's good. Okay. I have 2 teams of 4 right now. If I can find one person.
I don't have teams.
Do you have a team? Perfect. Okay, who has the 2 teams of 4? Who has the teams of 4? Who has the teams of 4? You have 4 in your team? You have 4? Okay, and how many do you have? 4? Do you have, yeah, do you have 4 in your team? Yeah. Yeah, you have 4 in your team? Oh, are you in their team? Are you? Okay. Okay, because I might have to take one from your 4 and put you in over here. Put somebody in over there. If somebody else comes in. So everybody has teams of 3? Right? Okay, so let's go. We're doing JP Morgan, okay? We're going to do an intrinsic evaluation on JP Morgan, so we're going to value the stock. And it's basically everything that you've already learned on your quiz and your midterm, okay? We're just going to apply it now. This is the final product. This is the way it needs to look, okay? It's got to look exactly like this. Every semester I have somebody do whatever they want, and it's not going to cut it. I'm going to throw it away, okay? Because I can't use it, because it's outside the standard, okay? It's going to be a clear cover, like that. It's not an opaque cover, it's a clear cover. Okay, everybody understand? Okay? And then it's going to be a black wire binding like this, okay? Not plastic, black wire coated. Plastic coated wire binding, exactly like this. And it has a black back like that, okay? So that's what the product looks like. How many marketing majors do I have in here? How many people are marketing? Okay, do you know what this is? Do you know what this is?
Pitch.
It's a pitch book, okay? It's a deck. Do you think you guys are going to be producing pitch books and decks? Yep. Yep, and if you know how to do it really well, really fast, you'll be involved in the production of the pitch book. And if you're involved in the production of the pitch book, what does that allow you to do also? If you produce the pitch book,
You choose the pitch.
you do get to do the pitch, right? And isn't that what you want to do?
Yeah.
Do you want to produce the pitch book, or do you want to pitch the pitch book?
Pitch.
You want to pitch the pitch book. You're going to pitch the pitch book to the client so you can get the audit work. You're going to pitch the client so you can get the advertising work. You're going to pitch the client so you can get the marketing campaign work. You're going to pitch the client so that you can get the investment money under management. You're going to pitch the client on your investment research, on your portfolio research, on your securities research, on your legal case, that you're trying and that you're arguing. This is the pitch book. How long are these pitches? When you do a pitch, how long is it? What's the optimal time period for a pitch? When you pitch somebody, when you do the presentation, what's the optimal time period?
Less than 5 minutes.
Got it. 5 minutes is the best. 10 minutes you didn't prepare. 8 minutes it's too long. It's usually between 5 and 7 minutes. Okay. On the first page, and actually a lot of this stuff is already on the course website too. These are just some templates. You want to take pictures of them. There's some templates on the website too. So right off the bat, you can see what the company is, what your recommendation is, the intrinsic value compared to the current price, the discount of the premium, and then the team. Do not put USF on this. Okay, do not put USF, do not put any course information on this pitch book. Why would I do that? Why would I not want to put the university or the course on this document?
Liability.
No?
Because you don't need to pitch to USF?
What?
Because you don't need to pitch to school?
Well,
You're not pitching to USF, it's like, you're basically just like giving facts.
yeah, kind of. When there's no University of San Francisco on here or course on it, what does it look like?
You made it.
It looks like you made it as a professional, right? And when somebody looks at it, and you give it to them for an interview, as an internship or a job, if you have the university on there with a course on it, they're gonna think it's a course document. But if you don't have the university or the course on it, they're gonna think you did it professionally. Or you're in grad school, one of the two. And isn't that what you'd rather have them think? Exactly, okay? And then you're gonna have the company overview, all right? What are you gonna be talking about? Then you're gonna give me a little background on the company. We're doing JP Morgan, okay? JP Morgan. So you wanna write that down. Then you're gonna have, actually usually here after that, after the little background on the company, you might have like culture and vision. You know, what's the overall culture of the company? That could be that slide. And then you probably have organizational structure of the company or business lines of the company with the percentage of the revenue generated from those business lines. Yes? Isn't that what you want to know? The organizational structure, the business line contribution to the overall revenue of the company. This is basically, this exercise, do you know what a capstone course is?
Yes.
Yeah, when do you take the capstone?
Last.
Your senior year.
Yeah, your senior year in the last semester. For those of you, how many people are seniors? Okay, so you guys are going to be taking that next semester. How many juniors? Okay, so a lot of juniors. This is basically a mid-program capstone. This is basically the capstone. Okay, but I'm bringing it up into the finance class, into the fall semester, so that you totally understand how to do these decks. When you get to your strategic planning class, you will have already gone through this. This is the stuff that you do to be able to understand what the value of the company is. And is it important to understand the value of the company? Yeah. And do you use just financial ratios and financial metrics to value the company? No. You gotta look at the org structure, you gotta look at the culture, you gotta look at the leadership, you gotta look at all that stuff. Also, here are the products and services that the company provides. Is that important to understand the product mix?
Yes, sir.
Absolutely. And don't you want to know what products contribute the most to the revenue?
You want
Yeah. And don't you want to know what products are, product revenue is growing the fastest as a contribution to overall revenues and earnings? Yeah. And doesn't the business segment, the org structure, and the product mix tell you what the comparative advantage and disadvantage is for the company? And if they're matching the market demand or where their comparative advantage is? For Wells Fargo, it's home mortgages. They dominate single-family home mortgages. Goldman Sachs dominates investment banking, okay, and trading. Goldman Sachs does not have a branch. JP Morgan has branches all over the world. Goldman Sachs doesn't have any branches. They just have regional offices. Goldman Sachs does not do personal business loans. although they're starting to do business loans, personal loans, and they're gonna issue a credit card. So they're moving into the business and personal banking business to grab market share from other companies. Oh, here's a market segment table right here. You could also put a pie graph in there, so very quickly, sorted from high to low, I know what business segments contribute the most to the revenue of the company. So you're gonna have to do some research. Oh, leadership. Is it important to understand the leadership for these companies?
Yeah.
What do you notice about the leadership of this company?
It's 6 people.
6 people that look like who?
That are men.
Yep, old white guys. Okay, right? And where'd they go to college?
Ivy Leagues.
Yep,
Ivy League
Harvard,
schools.
MIT, Columbia, NYU, right? So these top firms hire from the top schools. The top 5 banks, headquartered in the United States, control 50% of all the assets in the banking industry. It's an oligopoly. It couldn't even be considered a cartel. The top 5 banks, the peer group that we're analyzing, controls over 50% of all the assets in the banking industry. Is that amazing? Is that amazing?
Scary.
Yeah, these are the top companies. So you think Salesforce and, and Cisco and Intel and those companies, well, they dominate the tech industry. These are the top companies in the financial services industry. Fiercely competitive with each other. Fiercely innovative, right? So we're analyzing the top companies, okay, within this segment. So it gives you the name of the individuals. How do those pictures look? Do they look pretty good?
Yeah.
Yeah, marketing people, they were photoshopped to look good. Some of you in the past have given me these pictures that look like, people look like Gumby, or they look like aliens, okay? You're gonna have to work with the photoshopping to crop these things and make them look really good, okay? Can you give a deck to an investment committee member where the leaders of the companies that you analyze look like aliens and Gumby? No. Because they're gonna think if you can't professionally put together this pitch book, and if there's any errors in the pitch book, what do they assume right off the bat?
You're not qualified, you don't pay attention to detail.
Yeah, exactly. Your product and your analysis is probably flawed if your pitch book looks like crap. Okay, so you have to be really, really focused on the formatting. And I believe that a lot of the pitch books that I gave you, I had gone through them at least 2 or 3 times. And then I told them, I said, okay, your pitch book is done, print it out in color, and go down to FedEx or whatever and go get it bound professionally. And the leader puts it in the deliverable 3 and hands it to me with a note telling me the participation of each of the individual team members that participated in the project. Okay? Here you have the ranking of the financial institutions by total assets. How big is JP Morgan? How big is JP Morgan? How big is, how much? 2.5 trillion, is that big?
Yeah.
Yeah, that's freaking huge, okay? And B of A is like 2.2 trillion. Wells Fargo is 2 trillion. Citigroup, 2 trillion. Is that a lot of money? Yeah, that's a lot of money. And we don't use US Bank, we use Goldman Sachs as our 5th carrier, okay? Then you have your SWOT analysis. Does everybody know what SWOT analysis is? Did you take your management and organizational behavior class? Did you conduct a SWOT analysis? Yep, okay, awesome. So give me the SWOT. And now you're gonna move into the financial ratio analysis, okay, which is the first step in your fundamental securities analysis. So you're gonna put together 2 tables of financial ratios. And you're basically gonna conduct financial ratio analysis to come up with the overall financial condition and position of the firm. The target company, in our case, the subject company is gonna be JP Morgan. The direct competitor is Bank of America. Then what we're gonna do is we're gonna use the assets for the peer group, sum it up, divide it back to get the weights, and we're gonna calculate weighted average financial ratios to use as the peer group ratio. And then we're gonna go out and find industry ratios to compare it against. Then what we're gonna do is we're gonna do line by line analysis For example, profit margin is the first financial ratio in this case. For this one, profit margin for Goldman Sachs was basically 17%. 23% for JP Morgan, 22% for the peer group, 20% for the industry. So basically the profit margin for Goldman Sachs was below the peer group in the industry. So I would give it a below average on that. The ROA was 0.4, JP Morgan was 0.97, peer group was 1.0, and the industry was 0.5. So we gave it a below average there. If the financial ratio for the subject firm is above the direct competitor and above the peer group, you're going to give it an excellent, you want to write this down, you want to give it an excellent condition. Okay? If it's at the peer group, you want to give it a good. If it's above the industry ratio, you want to give it above average. If it's at the industry, you give it an average. And if it's below the industry, you give it below average. Then what you do is you basically code the sample of financial ratios. You step back and you look at the most occurring or the ones that occurred the most. So basically below average came up the most. So we gave an overall financial condition and position for Goldman Sachs a below average for this sample of financial ratios. And then we did another series of financial ratios. We did forward PE, dividend yield, and revenue growth, average revenue growth over the last 3 years. And Goldman on the PE got below average, got good on the dividend yield, got good on the revenue growth, and got excellent on the earnings per share. So overall, I would say it's probably good. Right? JP Morgan will probably be better than Goldman Sachs. Obviously, the financial ratios are going to be different depending on the time period in which this report was done. And we're going to be using 2018 financial ratios. Is everybody writing this down? I hope you are. I wouldn't be checking your Facebook page because I'm going through a lot of information right now, and you probably should be following along and taking a lot of notes. The first valuation approach is going to be the technical analysis. So you're going to go up to stockcharts.com and you're going to go back 3 years, and you're basically going to cut and paste the 3-year technical chart, the price chart, into this slide. And then you're going to go apply the technical analysis, which you already know how to do. So you know how to identify the support lines, and the resistance, and the trend lines, accumulation, consolidation, sideways patterns, upward trends, downward trends. You're going to look at the RSI and the MACD to see if they're moving up or moving down. You're going to mention that stuff in the side here, and you're going to give me an overall trend or overall momentum of the stock price over the last 3 years. Okay. And as you can see, Goldman Sachs was pretty good. It's in an upward trend, although it started to move sideways here, and then actually started to move down with a correction. This is probably a year or 2 ago. So we'll do the analysis if you need any help. Then what you need to do is you need to project out where you think the stock price is going to be at this time next year. Either it's going to be above the current stock price, it's either going to be flat, or slightly above, or slightly below, and you got to calculate the premium and the discount based on the target price. Not the intrinsic value, but the target price. Okay. Taylor, did you have a question?
No.
Okay. So that's the first of your valuation. Then you're going to conduct the perpetuity approach. Okay. You can calculate the intrinsic value using the perpetuity model. First thing you need to do is to come up with the discount rates or the expected returns. So what I'll do next class is I will start to do the calculations. Okay? And we can use the capital asset pricing model to come up with the cost of the equity or the expected return on the equity, which will be one discount rate. We can also use the expected return on the market. We'll use the S&P 500. So we'll look at what the average S&P 500 average annual compound growth rate has been over the last 20 years as an expected return on the market, which we can use as a discount rate. And we'll take the CAPM and we'll go out and we'll find, you need to be listening to this, go out and find the, some kind of yield to maturity on a 7, 8, 9, or 10-year JP Morgan bond, and you use that yield to maturity as a proxy cost of debt. And then what we'll do is we'll get the long-term debt, the owner's equity added up, and we'll be able to calculate the weighted average cost of capital, which will be our third discount rate, and that will set the discount rate sensitivities that we're going to use to divide into the 2020 earnings per share forecast that you're going to make to get the intrinsic values. Am I speaking a foreign language here? Are you following along? You should totally understand by this time exactly what I'm talking about. Okay? Exactly what I'm talking about. This is because I'm speaking in the language of finance. All right? Oh, back on that page, you're going to give me a table right here that's going to give me earnings per share for 2018. You're going to approximate 2019, and you're going to forecast 2020, and that's going to be the metric that we're going to use to calculate the intrinsic value using the perpetuity, Gordon growth, and the multiple approach. Okay? Then over here, you're going to have a table that has the capital asset pricing model, because I got to burn that into your brain, okay, on how to do the cost of the equity or the expected return on the equity using the capital asset pricing model. So I need you to find the beta. What is the beta for JP Morgan? Okay, and I'll show you where to get some of this data. Okay, then you're going to do the Gordon growth model. Same CAPM, same earnings per share forecast table. You're going to have the constant growth rates up here. You're going to have the discount rates here. And this is going to be the intrinsic valuation matrix using the Gordon growth model to calculate the sensitivities for the intrinsic values. Okay? Then, what's the next approach? Multiple approach. So then what you're going to do, you're going to take that EPS table and you're going to basically put together a box, a table of multiples for the peer group, okay? And you're going to put JP Morgan first. And you're going to have 2018, projected 2019, and 2020 estimated PE multiple, okay? And then you're going to do it for all 5 of them. This sampling of PE multiples is going to basically help you set the multiple ranges and the sensitivities of the PE multiples that you're going to use to multiply against the 2020 earnings per share to get the intrinsic values using the multiple approach. Okay, everybody following so far? Okay. What's the last method? Discounted cash flow. So you're going to do a 5-year projection. How many years of EPS do we need to forecast? If it's a 5-year holding period, how many EPS projections do we need? 6. What do we use the 6th one for? Terminal value calculation, exactly. So here's the terminal value plus the earnings per share in the last year of the holding period, discounted by 1.08 to the 5th power is going to give you your discounted cash flow in the last year of the holding period. Year 1, 2, 3, 4, 5. If I add all of those up, I get the intrinsic value right there, which matches the intrinsic value right there, which matches the intrinsic value right there compared to the current stock price, gives me either the premium or the discount. Okay, now I have all of the valuations. Now what we do is we basically do the summary chart, scenario charts. That gives me the 3 weighting scenarios for each of the individual intrinsic value models, with the one in the middle that you pick for the final intrinsic value right there with your recommendation right underneath it. Then the next page is going to be your recommendation. In this case, it's a cell with the final intrinsic value next to the current stock price with the discount of the premium. Then you have the 12 trades. You're going to use a financial services index to be, in this case, it was a sell recommendation, so we're riding forwards, futures, calls on futures, and buying puts on futures. And then we're doing a financial services ETF, and we're going to sell short, write calls, and buy puts. And we have the actual stock and we're gonna recommend selling short, sell short, write calls and buy puts for a total of 12 trades. On the next page, we're gonna have basically references, where we got a lot of the analysis. This, I guess, with some references, which is okay. And then the last page, which you want to put, I don't know if you guys have the last page, but over the last semester or two, what I did was I had you put your names and your titles. So one of you is going to be your name, the portfolio manager. One person's going to be the senior equity analyst. The other person's going to be the equity analyst. You're going to have a line above your names, and you're going to have a line over here with two sideways slash marks, where you're going to sign it and date it, basically stating that you, as the chartered financial analyst or the chartered financial planner or the PhD or the CPA or whatever your credentials are, that basically you signed off on this research based on the best of your capabilities in conducting the analysis, based on the best information at the time, and based on the time that you were given to produce the report. Okay, everybody clear on what we're doing?
Yes, sir.
Yeah. Okay, welcome to the real world. Okay, we're actually producing real product. Okay, so where do we get the data? Okay, are we going to need data?
Yes.
Yep. So here at USF, which I don't really understand, because it's a really rich school and has a lot of money, but it only has one real data source, okay? And that's called Mergent. How many people have heard of Mergent? Mergent. Mergent. It's either yes or no.
No.
No. Okay. So what you're going to want to do is, let's go up to the main page. Okay, let's go back to the home page. So you go up to your home page. Okay, you go up to the home page, and then you click on Library up there. All right. Are you guys following along on the computer? Okay, please don't check your WeWorks or your WeChat or Facebook or your Instagram or your MySpace. Does anybody use MySpace anymore? And then you go to Library. I believe it's under, where is it? Digital collections. So click on digital collection. Oh, that's not it. Where is it? Oh, databases. There it is. Go search, and then go databases. Got it. I believe that you can just, there's Mergent right there. I just typed in Mergent. And there's Mergent online. Have you guys used this?
No.
Are you going to need it for your capstone, of course?
Yes.
And maybe for some of your other classes too. Do you guys do a library requirement here? Do you do a library requirement? No, at San Francisco State, you had to do a library requirement before you graduated.
What did
So
that
it's a
have?
library requirement.
Basically, they wanted you to know how to do research within the library.
Oh, we did it
You did that?
Yeah.
in red,
Okay.
Yes.
freshman year.
Okay. Oh, that was a long time ago. Okay, so this is what Mergent looks like. Can you tell me what the ticker symbol is for JP Morgan?
Isn't it J?
What is
Is
it?
it JPN?
Yeah, J.
Is it JPM?
Yeah, it's JPM.
What's the peer group? What's the peer group that we're using? Who are we comparing JP Morgan against?
Bank of America?
Bank of America,
Goldman Sachs.
Goldman
Goldman
Sachs,
Citigroup.
Citigroup, Wells Fargo. Got it. Okay. So go to JP Morgan Chase. And this is your JP Morgan Chase page. here's basically some summaries, right here, of the company. Here's the key executives. Jamie Dimon only makes like $1.5 million. But if you look at his total compensation, he makes like $30 million a year. And how old is he? I think he's like 53 years old. $30 million at 53. Is that pretty good? 63? That's still pretty good. Oh, look, there's a PE ratio. There's an earnings per share. There's dividend yield. There's market cap. So here's some basic information. Let's go back to company details. Revenue, earnings per share, balance sheet. Oh, you're going to need the total assets. What else? Executives. So you're going to need this for your for the leadership. These people all do stuff. Do not use boards of directors. Boards of directors don't do anything but rubber stamp what the CEO says. You want actual divisional heads, people who actually head up operating units that generate revenue for the company. Okay. What else? Company details, subsidiaries. Oh, long-term debt. Let's see if they actually give you. Oh, look at that. Some senior debt, and they actually give you some. Interest rates, some yield to maturities on the debt. Looks like it's around 6%. And look, they can borrow from the Federal Home Loan Bank at 2%. Pretty amazing. So that gives you kind of an idea of the cost of debt. You need to write that down. Okay, and then let's look at earnings estimates. That'll help. Because we have to forecast what the earnings are going to be for 2019 and 2020. Oh, look, they give you kind of an idea of what the earnings estimates are. It looks like around 10.4 and 10.6. So you probably want to write that down. I'm giving you the data. You need to write it down. Because on Thursday when I come in, I'm going to be asking you for the data. So you want to write this stuff down. You should be taking notes. Or are you just taking pictures? Or are you recording this? Or do you have a photographic memory? Or are you taking notes? Are you guys taking notes?
Yes.
Yes, please, take notes. Don't waste my time on Thursday. Having you dig around or wait for everybody else to get the data for me, okay? I'm giving you the data now, okay? And I'm gonna be asking you for the data really quickly because I wanna do all the valuation work and I want it done by Thursday so that you can bring me a draft the week after next, before Thanksgiving, so I can take a look at it, so that when you come in to do the presentation, if we can get it all done, then we do the presentation, right? Because what's after Thanksgiving?
We have like a week of classes and that's it.
You got a week of classes, right? So the week after Thanksgiving, you're doing your presentations. So you're gonna have 2 nights of presentations.
5 minutes for this, right?
Yeah, and you're gonna have to be professionally dressed to do it. And you need to bring me the decks, so I can sign off on it and I can clean it up, okay? You need to take the deliverables and you need to take this project, you need to take it seriously, okay? Because this is where everybody, Professor Souza, I worked so hard on everything, I did all the extra credit work and everything, but you bombed the memos and you bombed the deck, okay? You didn't focus on this stuff. This stuff is really important. You can actually use this stuff. All right, so you need to write down the earnings per share. Let's see, equity pricing. They don't give you any estimates on the stock price. Value line, which is another source, actually does that. Here's some reports, we're not going to use those. So what you want to do, what I would do, and this is what I did, is I basically went to this Mergent page, right here. I went into Mergent and put in JP Morgan. And then what I did was I opened up a tab for the internet. I basically took the URL for JP Morgan and I put it in this tab, like that. And I basically have JP Morgan here. Okay. Actually, it's here, but I have it over here. So basically, I have JP Morgan. I looked up Bank of America, grabbed the URL, opened up another tab, and put in Bank of America. Oh, there it is. ING JP Morgan. Then I went back to this one, I put in Wells Fargo. Got Wells Fargo, cut the URL, put Wells Fargo there. Steve, are you lost? Then what I did was I put in Citigroup in here, got the URL, and then put in Citigroup here. Then went back and put in GS here, took the URL, opened up another tab, put in Goldman Sachs. So basically now I have I have the subject firm, and I basically have all of the peer group right there. So now I can conduct all of my analysis. Okay, you need to follow along here, okay? Everybody needs to follow along now. So now what you want to do is you want to go back to JP Morgan. Go back to JP Morgan and click on this right here. Add to company analysis list. And click the plus button. Got it. And down here, when you click on it, right here, it's going to show you that you have one company. Then what you're going to do is you're going to go to Citigroup. You're going to click on this two company analysis list, and it's going to add Citigroup to your list. Then you're going to go to Bank of America, add it to your list. Now you have 3. Then you're going to go back, you're going to do Wells Fargo, add it to your list. It's going to say 4. And then the last one is Goldman Sachs. And you're going to add it to your list. And now you have 5. Okay? Now you have all 5 of the companies. I'm trying to save you time. Usually in grad school, they're going to make you go dig through all of these reports to pull out the data manually to then input the data into a worksheet. What I'm doing is I'm showing you how to basically dump all the data that you're going to need using the interface. Okay, it's extremely efficient. So now you're going to go to the company list. Okay, you guys all need to do this, okay? Because I'm giving you the data. And then what we're going to do is you're going to get the data. You're going to come back on Thursday. You're going to open up all these tabs along with all the data, and then you're going to start feeding me information, okay? So that I can pound out the analysis, hopefully in one place. Okay? And it will give you enough time to be able to produce a solid document in the analysis. Okay? You're not all doing a different company, you're doing the same company. Okay? So I'm making it easy on you too. So you click on the company analysis list, and here's your list of companies right here. So now you want to click on that button right there to move all the companies over into your company report. Bam, done. Okay. Now what you can do is go over here, click on company details. Maybe long-term debt. Bring that over, I could use that. Capital structure, yeah, I could probably use that. Earnings estimates, yeah, I can use that. Business segments, yeah, I can use that. Pricing information, company fight. Let's see what we have here. Dividend yield, yeah, I could use that. Earnings per share, take it. Dividends per share, okay. market cap, all right, PE ratio, price change. Do we really care how many variables we have that we're picking? Do we really care?
As long as you can eliminate them later, right?
Yeah, you'll be able to, yeah, you're not gonna use all the data, but what I like to do is I go through and I pick all the stuff I think I'm gonna use. I'm not gonna use all of it, but at least I'm gonna get, it's better to have more than less, right? Then down here, under company financials, expand that. Income statement, okay, I'll take it. Balance sheet, okay. Ratios, okay. Oh, here's the ratios. I'll take annual, okay. Executives, news, we do news. Oh, look, competitor. Did you see any earnings per share in here? Oh, there it is right there. Got it. Okay, now what you want to do is to select a format right there. Excel format, which you want to pick.
Can you scroll down another report items, please?
This one?
No, on the right, the far, that box, yes. Can you scroll down so I can see the
Oh,
mirror?
this one? Did you get that?
Yes.
Okay. And then you want to create, this will be the first one, we'll just test it. So I might want to save the company analysis list and save the report template. So let's create the company report. See what happens. The little thing's turning up there. How much time do I have?
You have like
15
2
minutes.
minutes.
2?
Isn't it? You have 40 minutes.
No, it's 20.
Oh, sorry. No, no.
20. That's 7 minutes short.
What's happening? I got an error. Did anybody's Excel pop up?
No, it's still waiting.
Mine also crashed.
Did it crash? Let's try it again. Isn't that what always happens? Company details, monthly debt, capital structure, earnings estimates, business segments, pricing information, dividend yield, earnings per share, market cap, PE ratio, company financials, annuals. We want to use as reported. 5 years. Income statement, balance sheet, ratios. Let's see. We want Excel and create multiple companies. Let's see what happens. Nicolette,
Oh, crashed again.
did it?
Do you think there's too many things clicked?
Okay. Yeah, probably, too many people at one time. So does everybody know how to go get the data?
Yeah.
So let's go back.
Well, if everyone did it, there's something wrong with the system.
Are we supposed to do like one at a time?
Yeah, you can do it one at a time too.
Okay, this mine just crashed again.
Yeah, you might want to try it one at a time. So what I'm gonna need, what you can do too, is here, you guys, you know, try to get the data, but follow along here. You need to write this down. Okay, so what we need to do is we need to go to company financials. You need to go to standardized. Right here, we're gonna use standardized and we're gonna use ratios. So if you click on standardized, and we wanna go income statement, and I wanna go back as far as I can, and I wanna click refresh, right here. And what I'm gonna need you to do is pull this up, and you're gonna give me the earnings per share, basic, okay, for the years. So what we're gonna do is we're gonna go back, the 80s, the 90s, 2000, and from 2000 to 2009. So I'm gonna have basically 30 years of data. And we're gonna put in the earnings per share. What I would do is get the earnings per share, export it into Excel, and calculate the year-over-year change in earnings per share. Why would I wanna go back in time for earnings per share? Why do I want to look at historical earnings per share?
See trend and growth.
Exactly, I'm going to be able to look at trend. Are we in a recession?
Not currently.
No. So am I going to use recessionary earnings per share growth rates going back in time?
No.
No. Are we in the recovery phase right after a recession? No. Are we in the growth peak phase?
Yeah.
Yeah. Yeah, are we in the decline phase? Are we
I'd say-
falling into a recession?
I was thinking it was late maturity.
Yeah, exactly. So you're gonna be using late stage growth peak, right, going back in time. So we're using the business cycle and look at earnings per share growth rates for JP Morgan over the business cycle, going back 3 or 4 business cycles. And we're gonna be able to use that macro trend to be able to forecast earnings per share for this year, next year, and the next 4 to 5 years. When do you think we're gonna be in a recession?
In the next, like 4 to 5-ish years.
Where?
I said within the next 4 to 5 years.
Yeah, like within the next 4 to 5 years. But are we gonna be in a recession this year?
No,
No. Are we gonna be in one next year?
probably not.
Probably not. What about 2001?
That already passed.
That already,
I'm sorry, 2021?
probably not.
Probably not. What about 2022?
Maybe
Yeah,
potentially.
maybe, so we'll take down the growth rates, right? So if we know what the historical growth rates of earnings per share is, particularly in the most recent period, and how they grew in prior late stage of the business cycle, we can use those as guides to forecast the earnings per share over the next 5 years. So we'll be able to forecast 2020. And we can use that for perpetuity, Gordon growth, and multiple approach. And we'll project out what the earnings per share growth rate is going to be for the next, through 20 through 26. And we'll have the earnings per share that we'll need to be able to calculate the discounted cash flow approach. And then what you wanna do is you wanna go back up here, and you wanna click on ratios. And they're gonna give you the 2018 ROA, ROE, net interest margin, revenue per employee, loans to deposits, debt to equity, total asset turnover. These are basically a lot of the financial ratios that you're gonna use for your financial ratio analysis. And we'll do some of those too.
Professor,
So-
the class is over.
Okay. So can you get me that data? Yeah, and bring it.
For all of them?
I just need the historical earnings per share and earnings per share growth rates, just for JP Morgan.
Okay.
I will need the financial ratios for all of them. I'll need the total assets for all 5 of them. And I'll need the total long-term debt and the value of the owner's equity, the value of the long-term debt and the value of the owner's equity. I'll need the beta, and then we can calculate the rest of this. What you'll see, it's not, this is not that hard. Once you got the data, it's easy. All right?
Could you one more time run through that? You said you want basically the EPS of the last 30 years.
Yeah, I think it goes back to like 1980,
Yeah,
so annual.
okay.
Long-term debt, owner's equity, value. Financial ratios for the peer group, for the 5. We'll need the beta. And we can calculate the return on the market. And then if you pull those tabs up, we'll have those available if I ask you.
So just have them ready to go.
Just have them ready. Totally. So it's the first thing you'll do when you'll come in, is set up all the data. Yes, we'll need the assets, the financial ratios. Stockholders' equity and the long-term debt. We'll need the data. And if you can, pull that into the spreadsheet and calculate your percent change, going down, we can pop it.
Awesome. And I'll video, yeah.
Yeah, exactly. Totally. And if you can turn that off.
Yeah.
Okay. Julia, those aren't even green.
Oh. Do I?
No,